What is a trend line? Trend lines are easily recognizable lines that traders draw on charts to connect a series of prices together or show some data's best fit. The resulting line is then used to give the trader a good idea of the direction in which an investment's value might move. A trend line is a line drawn over pivot highs or under pivot lows to show the prevailing direction of price. Trend lines are a visual representation of support and resistance in any time frame. They show direction and speed of price, and also describe patterns during periods of price contraction. Trend lines can be used to identify and confirm trends. A trend line connects at least two price points on a chart and is usually extended forward to identify sloped areas of support and resistance. Lines with a positive slope that support price action show that net demand is increasing. As long as the price action stays above this line, we have a bullish trend. Lines with a negative slope that act as resistance to the price action show that net supply is increasing. As long as the price action stays under this line, we have a bearish trend. Price usually retests a sloped trend line several times, until it breaks, at which point we may have a trend reversal. The more points there are to connect, the stronger a trend line becomes. Different strategies have different rules on how far apart connected price points can be and whether to connect wicks or candle bodies, but all trend lines break eventually. TradingView has a smart drawing tool that allows users to visually identify trend lines on a chart. This tool can also be used to illustrate trends on indicators. Trend line basics: draw trend lines through the lows of an uptrend and through the highs of a downtrend. On long-term charts, draw trend lines through closing prices. Use either normal or log scale charts, but be aware of their respective weaknesses. Trend lines must be respected by at least 3 lows or highs in a downtrend. If respected twice, the trend line is not yet confirmed. Trend lines should not intersect, cut across, price at any point on the chart if extended. Support and resistance: trend lines do not predict levels of support and resistance. Support and resistance run horizontally, not at an angle. For an explanation of the basics, see support and resistance. Many traders confuse the two concepts. The lower line in a trend channel is often referred to as the supporting trend line. Highs or lows on a short-term chart, 6 months or less, draw trend lines through the lows during an uptrend. Trading signals: trend line breaks signal a change in momentum, not necessarily a change in trend. Trend line breaks often look obvious with hindsight, but you will normally find that the trend line depicted was not the first one drawn. Several trend lines may be broken before there is a trend reversal. When should trend line breaks be acted upon? If trading short-term or swing trading, act upon trend line breaks when you receive price confirmation, or confirmation from another indicator, as you would for any other momentum indicator. In the longer term, trend lines are an effective tool for exiting trends that have spiked into a blow-off, or downtrends that have spiked into a cathartic sell-off. Blow-offs: a fast accelerating trend, or blow-off, is normally identified by at least 3 accelerating trend lines, each at a markedly steeper gradient than the previous one. Yahoo displays a classic example in 19 and 99 2000ths. Log or normal scale. There has been much debate on the chart forum over the years as to whether trend lines should be drawn on log scale or normal scale charts. The case for log scale has been summarized by Ulcerin as: brokers and analysts chart in log mode. They advise institutional clients whose order flow has a marked impact on price action and trend. Their advice is heavily influenced by breaks and refusals of price at key trend lines and channels. These are based on logarithmic charts. Logarithmic trend lines are, therefore, more important. The case for normal scale, linear, trend lines. Most trading authors use linear charts: Stan Weinstein, Alexander Elder, Chris Tate, and Darryl Guppy. It is questionable whether most analysts and brokers use log scale charts. Many trading authors, including Stan Weinstein and Chris Tate, are former analysts or brokers and use linear charts. In my opinion, the two sides are talking about different time frames. Automatically plots trend lines based on swing highs/lows on multiple time frames. This indicator will save you the time required to plot horizontal trend lines that occur on swing highs and lows where the trend usually changes direction. Then delete them and redraw elsewhere once they are mitigated, i.e. price crossed above/below them and breaks the trend line. Choose up to 4 time frames from which you can have trend lines drawn automatically. Set custom colors, trend line style, text and position of trend lines, on chart of off chart on the right hand side. Choose how many trend lines of each type, untested, touched and mitigated, you want to